Technical analysis and fundamental analysis are two primary methods used by investors and traders to make decisions in the financial markets. Both have distinct approaches, principles, and methodologies. Here's a comparison of the two. Technical analysis. 1. Definition. Technical analysis involves evaluating securities by analyzing statistical trends gathered from trading activity, such as price movement and volume. 2. Focus. Primarily focuses on historical price and volume data, uses charts and other tools to identify patterns that can suggest future activity. 3. Key tools and techniques. Charts, line charts, bar charts, candlestick charts. Indicators, moving averages, relative strength index, Bollinger Bands, MACD, moving average, convergence, divergence. Patterns, head and shoulders, double tops and bottoms, triangles, and flags. 4. Time horizon, often used for short-term trading, can be applied to different timeframes, e.g. intraday, daily, weekly. 5. Assumptions, prices move in trends. History tends to repeat itself. Market action discounts everything, meaning all known information is already reflected in prices. 6. Advantages, provides precise entry and exit points, useful in volatile markets where price action is rapid. 7. Disadvantages, can be very complex and requires a deep understanding of various tools and patterns, may not consider the underlying fundamentals of the asset. And fundamental analysis. 1. Definition. Fundamental analysis involves evaluating securities by analyzing the intrinsic value based on financial statements, economic conditions, and other qualitative and quantitative factors. 2. Focus. Focuses on the overall health of a company and its potential for future growth. Analyzes economic indicators, industry conditions, and financial statements like balance sheets, income statements, and cash flow statements. 3. Key tools and techniques. Financial ratios, price to earnings, PE, price to book, PB, debt to equity, DE, return on equity, ROE. Economic indicators, GDP growth rates, interest rates, unemployment rates, inflation. Company analysis, management quality, business model, competitive advantages. 4. Time horizon, typically used for long-term investment decisions. Assumes that a stock's market price will eventually align with its intrinsic value. 5. Assumptions. Markets may misprice a security in the short term, but the correct value will eventually be recognized. Fundamental value is based on real, measurable factors. 6. Advantages. Provides a comprehensive understanding of a company's actual worth, less influenced by market sentiment and short-term price movements. 7. Disadvantages. Time-consuming and requires access to detailed financial data. Market prices can remain irrational longer than expected, leading to potential short-term losses. Conclusion. Both technical analysis and fundamental analysis have their unique strengths and weaknesses, and they are not mutually exclusive. Some investors use a combination of both approaches to make more informed decisions. For instance, an investor might use fundamental analysis to select a stock, and then use technical analysis to determine the best time to enter or exit a position. The choice of analysis method often depends on the investor's objectives, time horizon, and personal preference.